Hey everyone, it's been a while since I did a video focusing on the employment market, so I thought I'd focus on that this week. Most of the financial news media coverage of jobs has been upside down. Basically, the strong jobs reports are being portrayed as bad because it means the Federal Reserve will raise rates. But I think we need to look at this a bit differently. Job creation is a principal driver of all types of commercial real estate demand. And while 4.7% wage growth is inflationary, it's just a small fraction of why the Fed's raising interest rates. Chairman Powell has repeatedly, specifically said that the labor market needs to cool, but right now there are 4.6 million more job openings than there are people looking for a job. Cooling the market may take a while. Digging beneath the surface of the job openings data, I noticed an interesting trend. 51% of the current job openings are in businesses with fewer than 50 employees. Considering that companies with fewer than 50 employees comprise about 27.5% of the total employment base, and they have historically constituted just 39% of the job openings on average, having more than half of the job openings seems out of alignment. This led me to two considerations that could influence real estate demand. First, small businesses have been growing faster than mid-sized companies. From the first quarter of 2019 to the first quarter of 2022, companies with fewer than 50 employees increased their headcount by 2.1%. Conversely, companies with between 50 and 1,000 employees actually shrunk by about 2%. Finally, big companies with 1,000 or more staff members grew the most by 3.7%. The second thing I determined is that big companies, those that have more than 1,000 employees, are winning the war for talent. So we're seeing a bit of a barbell effect in the employment market. Big companies have been growing the most. Small companies have been trying to grow, but have been losing out on labor battles. And in between, mid-sized companies with between 50 and 1,000 employees have had the hardest time. Overall, the labor market is strong. The U.S. added 261,000 jobs in October, taking the total additions for the year to date up to nearly 4.1 million. If the employment market adds just 210,000 more jobs in the last 2 months of this year, 2022 will rank as the second strongest job growth year on record, surpassed only by the post-COVID bounce last year when 6.7 million jobs were created. Some cracks in the outlook have begun to emerge though. We're starting to see some layoffs. Mortgage and residential real estate firms, hard hit by rate hikes, have been tightening their belts. We've also seen layoff announcements from tech companies such as Twitter, Stripe, Meta, Intel, Seagate, and others. Despite the layoffs thus far, we are still seeing job additions and the unemployment rate is just 3.7%. So for now, the employment market is still comparatively strong, and that will generally be supportive of commercial real estate space demand. Office space faces the greatest risk of being adversely affected by the employment market. The national office vacancy rate edged up 20 basis points to 16.2% in the third quarter. The average third quarter downtown vacancy rate was 18%, while the suburban vacancy rate was 15.7%. If small businesses continue to hire, then suburban space should continue to have an edge. The average multi-tenant retail vacancy rate was 5.9% in the third quarter, just 10 basis points higher than it was at the beginning of 2020 prior to the onset of COVID. Finally, there's the multifamily market, which has seen rising vacancy rates for 2 quarters after hitting a record low vacancy rate in the first quarter. So in wrap up, I want to reiterate that the employment market is still strong. The U.S. is adding jobs. Although caution is elevated and there will definitely be challenges going forward, job creation has been good for real estate space demand. Even if we see a modest pullback in the jobs market, commercial real estate investors should consider the long-term perspective and keep their eyes on the horizon.